Hi, welcome back to the entry level trading course by Valetax. My name is Ryan Iferi, market analyst and your educator for this course. And this is episode 7. In this episode, we're going to be talking about support and resistance. These are where decisions are made. So stay tuned and keep watching. First thing we need to keep in mind is that price respects memory, and the market is a historical representation of data of previous prices relatively to patterns that show where the market or prices or investors could be looking at or heading towards. In order for us to understand why price respects memory, there are 3 key indicators that the market uses: support, resistance, and most likely sometimes trend lines. But today we're going to be paying attention to support and resistance because trend lines are just diagonal supports and resistance as well. First, we're going to start out by understanding what support is or what support levels are. An area where buyers previously stepped in, act as a floor temporarily, and strength increases with multiple reactions. A support area usually is where price has previously reacted upwards. It represents a zone where there are a lot of buyers and strength for buyers and availability of buy orders and retail traders willing to always buy at that level. It's usually not just a single line, but more or less like an area, a price range. So we can be talking a price range between 133.500 and 132.500. That zone becomes a very good support level. Sometimes we see a lot of beginner traders using lines to identify support and resistance, but sometimes this can be very misleading because you want to pay attention to the complete price action reaction within a price zone to identify that level as a support or a resistance. Now, how do we understand the resistance? It's similarly just like the support, but this time around is resistance are more for the sell side. It's an area where sellers previously entered the market. It acts as a temporary ceiling. So when we say something is resisting, it means it's preventing you from moving upwards. So that is what a resistance is. And a break above a resistance or a support level usually tells us that market strength is shifting. So how do I mean? The market moves in waves. Okay. Now, every time prices hits a ceiling and turns back down, we refer to these areas as resistance areas. And every time the market hits a bottom and moves up, we refer to these places as support areas. So we don't just want to identify resistance only as lines, but we want to identify them as zones. So probably from one price to this price as a resistance zone as well. Now, resistance are responsible for pushing prices to the downside, while support levels are responsible for pushing prices to the upside. Now, how we use resistance and support levels are important. Support levels are more important for the buy sides because this becomes our key indicator for bullish momentum, while resistance are important for the sell sides. So for sellers, because they are a key indicator of bearish momentum in the market. It shows what buyers failing to break above that level and prices coming back down. So resistance shows sell pressure, support shows buying pressure. Now, where we say a break above a resistance or a support shows a strength shift, is because for every time a resistance is broken, it shows that the sellers are no longer active and buyers have dominated the market. And similarly, if prices breaks below a support level, okay, it then shows that that these sellers are way stronger and the support level is no longer a valid buying area for the market. Now, when a resistance level is created, we refer to a break of this level and a return back into this level as a retest. So this is where the shift happens, where resistance becomes support. So a break out of resistance and a retest back into that previous resistance zone or area becomes a retest. This move is called a retest. And when prices finally respect this level and fails to stay below this level, but rather goes above it, this resistance finally becomes a support level. So we then say resistance becomes support. Likewise, if a support level is broken and prices retest previous support level, we then say what? That support has then become resistance. So support becomes resistance. And that is the simplest way to understanding support and resistance. And when support is broken and resistance is respected, what we then get is resistance bringing in sellers into the market. And this is very evident in a bearish market, and this is more evident in a bullish market. Moving forward, okay, now we need to understand how to draw these levels correctly. In order for us to identify resistance, we want to use the obvious highs, the point where sellers constantly came into the market from. So we're looking at every possible high that sells liquidity pulled into the market. And for the support levels too as well, where buyers were consistently buying from. Now, think in zones, not actual lines. So sometimes you might see the market create series of highs and candle wicks, as we have discussed in the candlestick formation, which you can refer back to in episode 2. We see that the market create lots of wicks. That is why we want to look at the market in zones, not just lines. And in order for you to draw this level correctly, like I previously stated in the last slide, you want to make sure that it is in alignment with market structure and the trend. So when we want to use support, we want to use support in a bullish market. And when we want to use resistance, we want to use resistance in a bearish market. Why? Because resistance shows signs of what? Of more sells, and support is supposed to show signs of what? More buyers. Okay, so we want to focus more on the support levels in a bullish market and focus more on the resistance level in a bearish market. So when we are drawing these levels, they need to align with what? With our market structure. So we see this level, this zone, for instance, now, this was a very good break and a retest of the resistance zone, and prices created a support here. So we see that resistance area or zone became support and prices bought. We see here that previous support zone broke below and became resistance, and what? Sellers came into the market. So this is why it's important for it to align with market structure. So we've gotten to the end of understanding support and resistance, and I hope this was very easy, clear for you to understand. And like I said, we'll get better in the level 2 when we get to the actual chart work. I'd like to see you in the next episode. So don't forget to like, subscribe, and share this course with another beginner. Thank you for trading with Valetax.